Hello and welcome to Bank and Transform, the top podcast in retail banking. I'm your host, Jim Marous, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. The future of banking is being driven by advancements in technology, changing customer preferences, new collaborations, and increasing regulatory requirements. Change is happening every day, and it is more difficult than ever to keep pace. As the industry gets ready for Money 2020 in Amsterdam, it is important to look to where the industry is today and where it might be tomorrow. And even more so, it's important to look at the opportunities, threats, and challenges we have ahead of us as we embrace the change that's taking place. I'm excited to have Shanker Ramamurthy, Global Managing Partner for Banking and Financial Markets at IBM, on the show today. We're discussing the massive changes occurring in the financial services industry and what can be expected as we go forward. While financial services institutions cannot control disruption, they can set themselves up to respond rather than react. The key is to lay out a vision for a strategic business response, looking at growth and performance opportunities, cost and efficiency benefits, and risk and compliance requirements. There is actually no better time to evaluate where we are today and where we will likely be as an industry tomorrow than as much of the industry prepares get to go to Amsterdam for Money 2020 Europe. So Shanker, before we get started, can you share a bit about yourself and your role at IBM Consulting, as well as how IBM works with financial institutions to be better positioned to have a future-ready positioning?
Sure, Jim. And it's a pleasure talking with you today. IBM, as you know, is about a $70 billion revenue organization worldwide. And under Arvind's leadership, we've really organized ourselves around two broad dimensions. One, which is IBM Technology, and the other being IBM Consulting. So IBM Technology, read everything we do in infrastructure, hardware, the hybrid cloud and such. And then everything we do in software, IBM software portfolio. That's about $50 billion of our revenues annually. And the balance, about $20 billion, give or take, is IBM Consulting, where we leverage technology, whether it be IBM's technology or any other technology that our clients need and want, including a range of industry ISVs and hyperscalers and a bunch of other technology to solve problems for our clients. Now, financial services happens to be the largest industry for IBM. It's about 25% of what we do in IBM. And for all sorts of historical reasons, that's been one of our most important industries for IBM. And so on the consulting side, I'm the global managing partner for banking and financial markets, which is about a $5 billion consulting practice. Wow. With tens of thousands of practitioners around the world working with banks and financial institutions on a day-to-day basis, solving some of their most complex problems. And when I say complex problems, if you think about it, well over 90% of core banking processes and payment transactions are touched by IBM around the world, and pretty much all the largest financial institutions in the globe, in every part of the globe, are users of IBM in some capacity, infrastructure, software, consulting.
It's interesting. We were talking about it before we started the podcast, that really it's amazing. You look back through the years, and I've been in banking a long time, but IBM's always been part of that solution, both from a technology standpoint and certainly from a consulting standpoint, whether it be in a formal state or informal as part of the technology side. And as we discussed also, both parts of IBM, the technology side and the consulting side, are both going to be at Money 2020 Europe. So as banks and fintechs and large tech firms and solution providers descend upon Amsterdam, what hot topics are you expecting to be top of mind in the industry right now?
Hey, Jim, this is a pivotal moment for the industry. And I say that having worked for the last 30 years in the intersection of technology, strategy, financial services, and for my sins, pretty much in all the 6 continents over the last 30 years. We always say, this is a pivotal moment, but I can assure you this
Yeah.
is genuinely a pivotal moment. And you started this dialogue, this discussion, by talking about, in my mind, the three things that our clients are dealing with, right? As they go to Money 2020, or as they look at the future. How do I achieve growth and differentiation? How do I manage my cost? My cost income ratios have continued to be stubbornly sticky in an era where growth is a challenge given all the macroeconomic topics that we can kind of talk about. I got to do these two things while simultaneously managing my risk and regulatory posture and exposure, right? So it's a trifecta, and there are pressures in each of those three dimensions today, which is rarely the case, coupled with this extraordinary explosion of exponential technology, which is both an opportunity and a profound threat. A threat in that it enables not just traditional competitors, which financial institutions know how to deal with, but non-traditional competitors, right?
Right.
The fintechs, which again financial institutions have done a good job over the last 10, 15 years of co-opting the fintechs. Now the ones that are emerging are what I call the tech fins, the large technology providers that are backing into financial services and capabilities like embedded finance, which are actually changing the landscape, going after some of the most profitable aspects of the financial services landscape. So you've got challenges on growth front, you've got challenges on the cost front, you've got challenges on the risk and regulatory compliance front, plus non-traditional competitors operating at a scale and size that we've never seen before.
Well, and change has not been linear here. We talk about this, but compared to what it was like in the past, you could predict what the future was going to bring. But now you talk about that trifecta. The importance of every one of these keeps on shifting as the winds change almost. And at any moment, let's say November 30th with ChatGPT, or 30 days ago or 40 days ago with Silicon Valley Bank, the whole equation gets shifted again. And so we have to be planning ahead, or a strategic planning process really has to have a lot built in with regard to flexibility and being agile. And obviously, on top of all of this, the elephant in the room right now is the economic uncertainty in the marketplace, both from an interest rate perspective, as well as regard to perceived stability of the banking industry overall. How do rates and the recent banking failures change the trajectory of banking and the change that you were talking about as it relates to both the technology and the consulting side of IBM as it works with financial institutions?
So in IBM, we tend to think outside in. So let me first talk to what it means for our clients, and then I'll talk to therefore what are we doing as IBM Consulting and IBM Technology to help our clients kind of master this change. And I should preface this by saying our clients tend to be the larger financial institutions in the main when I talk about consulting. I wouldn't say the same about IBM Technology, though there's a decent correlation. Right? IBM Technology supports a lot of the smaller financial institutions as well. On the consulting side, we tend to, in the main, work with the large established financial institutions pretty much in every part of the world. So if you look at what they're grappling with, to your point, not only do they have this trifecta, they've got this exponential technology that's changing the competitive landscape, right? When it changes the competitive landscape, you got to, and this is back to the innovator's dilemma. You've got both sustaining innovation and you got disruptive innovation, and you got to do both. And interestingly, when I started in consulting, and I'm gonna you can see my gray hair. I've been in this industry for about 30 years. I pretty much started in financial services consulting when I started my consulting career. Enterprises would develop a business strategy which would be generally stable over a 3 or 5 year duration, and then technology would then be brought in to help achieve the business strategy. We've got into a world today where in industries that are digital or can be disrupted by digitization, business and technology are almost becoming co-equal, because clearly you need business strategy to figure out how to leverage technology and exponential technology. But we're also at that point in technology evolution where technology capability is fundamentally driving business models and hence business strategy, both in terms of what incumbents are doing, but equally what the disruptive innovators are able to bring to the party that changes the status quo in totally unexpected ways, right? So we are, and you talked about ChatGPT, generative, what we think of as large language models and generative AI. Um, Only time will tell, but we are at that early part of the curve where it's not just exponential growth in technology, it could well be quadratic exponential growth in technology capability with a bunch of implications, that come from that. And if you think about what that means, and again, in the time that I've been consulting to financial services enterprises, the last 3 decades, we started from what used to be called data processing. We
Right.
then said, hey, it's about converting data into information. It became information technology. Then we said it's not just about information, you want to provide insight. So it's moving from management information systems to actually providing insights, and not just providing insights, but providing insights that enable you to real time change what happens in a business. Now we've gotten to the stage, and by the way, every one of these have had a deflationary impact on a lot of things that we've done. Now you've gotten to the stage where insight is becoming intelligence. And in fact, we are at the early bend in the curve where intelligence itself is available as a technology deflationary capability. And we are all wrapping our heads around what that means, right? And we are doing a whole bunch of interesting work with our clients. And of course, IBM Research is investing materially and substantially in it. We are doing this recording just before the IBM Think event, at which you're going to see a lot of really important announcements being made as we work with our clients to enable them to master this next bend in the knee, which is about intelligence itself being available much more easily, and really available as a deflationary capability that you can use to augment everything we are doing in financial services.
So it's interesting, Shankar. We talk about all this that can be done, but in the technology side, it's one thing, but in the consulting side, you're really trying to change the way organizations think about what they do. Change is not easy. It's not, even though we sometimes say we want to change, when it comes to actually doing it, it gets difficult. When you're working with financial institutions, what are some of the challenges you find in trying to implement what you believe needs to be done? What stands in the way of financial institutions actually embracing the ideas you bring to the table?
Hey, it's that's a great question. So I'm going to answer it in two parts because I realized I didn't answer your earlier question as completely as I could have. So on the one hand, let me talk to the kind of things we're doing around the trifecta for our clients, and then on the other hand, we should talk about and why is it taking our clients a lot of time to change, right? Because complexity is a huge issue in the financial services industry, and we'll come to talk about why that's the case and what can be done to help address that. It can take us in all sorts of interesting tangents. So I talked about the trifecta. So around growth, right? Um, Financial institutions, the large ones, in our opinion, have an advantage. In fact, in some instances, you could say almost an unfair advantage because they got an extraordinary amount of this whole thing about going from data to information to insight to intelligence. They've got an extraordinary amount of data that they can convert
Right.
into insight and intelligence to provide superior capabilities to their customers, financial institutions' customers. What we've been doing, and I'll give you a good example, bank called State Bank of India in India. It's the largest bank in India, one of the largest banks in the world in terms of number of customers that it supports. We've been working with them for the last 5 years on a program called YONO, You Only Need One, which is about providing a mobile capability that enables its customers to interact not just with the products that State Bank of India offers, but become a destination site through which State Bank of India customers can access pretty much all the capabilities in the web. So if you're booking a hotel, if you're doing travel reservation, if you're buying something in an e-commerce context on the web, what State Bank of India have done is they've been able to negotiate on behalf of their customers with these parties on the web that enable State Bank of India to customers to have a superior offer in terms of feature, function, price point, compared with if they directly approached, an airline or a hotel or an e-commerce website and such, right? That's a win-win-win, and it's a massive amount of growth for State Bank of India because it's deepened and strengthened the relationship with its customers, and it's not waiting for a financial transaction to happen before it inserts itself into the value chain, right? So we think about it as beyond banking ecosystem, because people don't wake up in the morning saying, I want to use my credit card. They wake up in the morning saying, I want to get me a cup of coffee, right? And then the credit card comes out. If you've embedded yourself in the intent of the customer by changing and extending your value chain, then you're naturally embedded into it as that transaction happens. Think the same thing in the case of mortgage. People don't wake up in the morning saying, I want a mortgage. They wake up saying, I want to buy myself an apartment or a house. So the first thing they're going to go is go look at listings, talk to some real estate brokers. What if the bank's website becomes a destination for that? So State Bank of India, in the public domain, this program has added over $40 billion to their valuation.
Wow.
All right. Complex programs requires a lot of change because these are large, complex organizations. But that's one example, right? I could go on. I can give you examples in DBS in Singapore, where we've been doing work in helping them, not just digitize their capabilities and process, but Piyush Gupta, the CEO, would say, we design for no operations. In other words, the mindset is, it's not, I'm going to take an existing process and see how much more I can digitize and automate. I want to rethink what's possible. And I start with the premise that I'm designing for no operations, recognizing that my employees and agents will insert themselves to add value where things cannot be digitized, where human intervention is required. That's a fundamental flipping of the paradigm.
Right, definitely.
Drives, right? And on the third, just to finish the trifecta, we're working with a large European bank. I mean, when it comes to risk and compliance and fraud, clients don't much care to have their names revealed, but we're doing a lot of interesting work in that space as the world moves more and more towards real time. There's a lot of things to worry about from a security, from a fraud, from a privacy, from a regulatory exposure standpoint. And that's an area in which IBM shines, because that's what we've been doing for our clients, being genuinely protective from a security and infrastructure and reliability and resiliency, and bringing all the capabilities required to address their fraud issues and their compliance issues as you move more and more to an instant payment and a real-time world, right? They're all the things we're doing for our clients, and these are genuine programs that we're working around the world with our clients on. You asked the question, the second part of your question.
What gets in the way? Yes, what gets in the way?
Right, right. And what gets in the way is complexity, right? If you're a large enterprise, and by the way, this is not just financial services, but financial services is the most digital of all industries, because everything we're dealing with in financial services is inherently digital. It's not like you're selling an automobile or you're shipping a finished product or anything. It's pretty much everything is digital. And the amount of automation that this industry has and the amount of spend they've had, and the amount in technology, the amount of software code that they have dwarfs that of any other industry by a very, very large magnitude, right? But what the unintended consequence of that is you've got layer upon layer upon layer of technology that's been built up incrementally over time, requiring an extraordinary amount of effort to untangle that complexity. And so many of our large clients are dealing with what I'd call the opposite of the network effect. So if we talk about network effect as driving value, driving revenue, and so on in certain contexts, when you got this complexity of multiple lines of business, multiple products, multiple channels, multiple customer segments in multiple geographies with multiple regulators, multiple risk issues to deal with, and you got to connect all these things together across the enterprise. Every time you make a change, you can just envision the truly n-squared exponential growth and complexity when it comes to change and all the testing and the rigor you need to bring to it. That does inherently slow things down, which is why I'm sure it's a topic we will talk about, which is why we have been working with the industry to actually minimize that complexity. How can we standardize? How can we
Right.
componentize? How can we simplify? How can we enable the industry to collaborate around well understood boundaries? And that's where BION, the Banking Industry Architecture Network, the .org organization that we are actively working with, is trying to ensure we bring a certain amount of not regulatory standards, but de facto standards to the way the banks collaborate between themselves. But importantly, as they collaborate with independent software vendors and systems integrators and other third parties to reduce the complexity for the entire industry. We can bounce into that.
So much of, in that context, so much of what we do as an industry is duplicative. We all do 80% of the exact same thing to get to point A. It's that extra 20% that makes the difference. I know that IBM's worked very hard in cloud work and things of this nature where they've standardized so many components of that so you don't have to rethink it every time. It obviously serves IBM well, but it serves your clients well in that you're saying, this much we don't have to refocus on. We've got that solved. It's taken care of. It's that additional innovation that really makes it work. And that's key to speed and scale, because you aren't going to get there with complexity unless you standardize some of the elements. So, when you're looking at innovations, if you look at what's coming down the road and look at what we'll be talking about in Amsterdam in a short while, what do you see as being some of the breakthrough innovations that you expect to see in the next few years?
It's a great question. By the way, again, I'd kind of, to my earlier discussion about, and points in the discussion about kind of business and technology becoming increasingly co-equal, where, or at least ambidextrous, where one is kind of driving the other.
Yep.
Let's talk about it in both those dimensions as you look at innovation. On the business side, in terms of what banks are doing for their customers, whether it be on the consumer side, the corporate side, or the regulatory side, I mean, there's an extraordinary amount of innovation happening in the payment space, right? So everything from contactless payments to buy now pay. I mean, products like buy now pay later to ISO 20022 to to a range of things on the consumer side, and equally on the corporate side. So cash management, liquidity management, treasury management, cross border. Moving towards managing the multiple rails, the disparate rails, bringing them together in a world of instant payments, addressing fraud, addressing real time. I mean, there's a range of opportunity there. Embedded finance. I could go on and on and on. There's a ton of things that our clients are doing, and they got to do many of them. Again, because of this trifecta, right? They got to do things in payments to achieve growth, to take costs out, and to address the regulatory exposure, and the potential fraud issues and the risk issues. And by the way, lurking in the background of things like central bank digital currencies
Right.
that are in the background, right? So that's an extraordinarily rich set of things to go and tackle. So on the one hand, you need to go and tackle that. On the other hand, when I look at exponential technologies, in IBM, we think in terms of three broad exponential technologies that are game changers for financial services enterprises. One is, of course, what we call the hybrid cloud, which brings together multiple disparate clouds, and private data
Yep.
centers and their own data centers for all sorts of regulatory reasons and practical, pragmatic market reasons. Our clients will have a combination of those. They're going to have multiple service providers and ISVs and providing capability that's running on their cloud, whether it be an SAP or a Salesforce or a Adobe or a Microsoft, and on and on. Um, they're going to want to leverage the hyperscalers and clearly IBM's capabilities. They're going to have their own private data centers, their own public, their own data centers, private cloud. You bring it all together, putting the workload most optimally where it needs to be, and that's a big area of focus. And of course, that's an area where we made the bet with Red Hat when
Right.
we put $30 billion plus to work on that space. And we're doing a ton of consulting work around that, as you can expect, because every one of our clients is grappling with this hybrid cloud world. So, and that's, I don't want to say it's early in its innings, but it's not halfway through yet. There's a massive amount of what we think of as deep cloud work to be done. It's not just about taking a piece of technology and moving it into the cloud. It's really truly refactoring it. When you refactor it and bring the workflows together in a way that maximizes the value of that refactored code, you can unlock amazing things. So that's one. Hybrid cloud is one as an exponential technology. If I look of just a few years into the future, 3 years, 5 years, quantum, entirely new compute paradigm
Yeah.
that's going to be having a breathtaking impactful. Um, um, it's going to be impactful on every industry, including financial services, because the kind of compute capabilities that it brings and the range of new things that you can compute that you can't do
Yep.
using traditional compute capability is very compelling. And IBM is making a huge bet on quantum. And interestingly, quantum cryptography is a subset of that, and quantum safe. You got to ensure your encrypted data is safe before quantum computing becomes a reality, because you can easily conceive, from a security standpoint, of bad actors stealing your data that's valuable over an extended period of time. And there's a lot of PII, personally important information, that has got longitudinal value, and they can sit on it for 2 or 3 or 4 years, wait for quantum cryptography, quantum computing, and decrypt the data, right? So that's a genuine problem. So, we're doing all sorts of things around quantum safe to proactively, preemptively ensure your data is safe from quantum computing. And that actually precedes the availability of quantum computing. But that's all, let's say, just a bit in the future. And today, the one that's exercising all our minds is the combination of AI, the broadest range AI and
Yeah.
analytics, but including large language models and Chat GPT and all its variants that are really language models and large language foundation models. Which, by the way, the amount of work that we're doing with our clients in this space is really very, very rich, because every one of our clients is either doing something or thinking about doing something, talking to us about it. I'm just looking at my notes because
Oh
this is
yeah.
moving at this is moving at absolute warp speed, right? And it's a topic that will be top of mind, is top of mind in almost every client discussion that I'm having today.
Well, and it's interesting because unlike anything that I've experienced in the past, and I'm not a technology whiz at all, but when you look at the difference between what was introduced in November and what came out in March, and the changes that were that quick, that big, that exponential, what you're talking to clients today about may sound very rudimentary in November of this year, just 3 or 4 months from now. And it really boggles the mind because it's one of the few technology advancements or innovative advancements that has hit both businesses and consumers dead center. There's very few people on the street that doesn't know something about what can happen here and has an opinion toward it. I mean, it's amazing how the consumerization of ChatGPT and conversational AI has taken over the marketplace as far as what's possible. Now, a lot to be done there, and it's a big thing to tackle. And as you said, it's probably part of almost every conversation, both from a conversational and content standpoint, but also from a programming standpoint.
It is.
When you look at innovation from IBM's perspective, do you think banks are going to stop looking for that next big thing and really embrace more the constant iterative innovation process that other industries have done forever?
Yeah. Hey, by the way, so that this is back to this notion of disruptive and sustaining innovation, because I think they need to do both.
Yeah.
And a good example, right? And when, by the way, our clients recognize that, and they're onto it. So if you think about, this large language model, I mean, every aspect of banking is getting rethought in the context of AI, generative AI, large language models, right? So whether it be how we're back to those three dimensions of growth, risk, and cost, everything to do with customer interaction and empowering agents, the employees of banks to be more impactful when interacting with the customers around call handling, around making agents smarter, around everything that you're doing around cost and operations, right? So think about everything from how you handle complaints and how you dissect it to figure out what I need to do in my processes, everything from providing smarter credit, everything to do with looking at processes. And I'll give you one example, right? So, for a client, we're looking at the KYC, know your customer, and account opening processes. And if there are 23 steps in the process, 16 of those are now going to be infused with large language models.
Yeah.
Right. So it's incrementally working your way through it. Why? Because this capability, when added to all the other capabilities we have, enables a lot of cool things. Summarization in ways never possible before when you got large corpus of structured and unstructured data, context-based search, not just search, but context-based search with an understanding of the context and the language, content creation, and doing content creation without hallucination is it's a whole new ball game, and we'll talk about more how we are doing that in real client projects. Code creation, and again, you got to constrain how you do that. There is this whole area of what we call prompt engineering, PROMPT, prompt engineering, prompting these models to enable them to do the right thing. And then train of thought engineering. How do you train these large language models to think step by step, not make giant leaps and make mistakes? And how do you minimize hallucination so that you constrain the output it provides? There's a lot of work happening here, real time, with clients around the world, and we're creating centers of excellence for our clients to accelerate their learning. Very, very rich area. So back to your point about, one thing, I don't think it's going to be one thing. Our clients are going to do both sustaining innovation, looking at infusing every aspect of what they're doing with exponential technology, while also doing disruptive innovation. And a lot of the disruptive innovation, I expect, is going to be around ecosystems and things that are touching the customer on the one hand.
Yeah.
You're going to see powerful models, and we're seeing these models emerge around the world. We're doing work for a client in Latin America, helping them. And there's one in India that's in the public domain. There are others around the world. And agri ecosystem, right? If you're a small farmer or a large farmer,
Yep.
beyond financial services, think about all the inputs that a farmer needs. Hey, what is my weather going to look like? When do I need to sow my crop? Fertilizers at what point? Where is the cheapest way where I can get, farm implements, tractors, and such? When do I sell my crop? Where do I go and sell my crop? You know, you, Imagine if a financial institution is able to bring all those capabilities together for the agri ecosystem.
Yeah, I think I saw that in Turkey with Denise Bank. I think they have brought together, as you said, different components, not just financial services, but everything from the meteorological to the agricultural to the rotation of the crops to the financing of equipment, and to go outside of banking and what's called a big super app for agriculture, which is just it wasn't possible before, as you've mentioned.
There you go. Jim, that's an excellent example. So a lot of the disruptive innovation in financial services is going to happen as banks do the mirror image of what some of these other enterprises have been doing, where they've been backing into financial services, right? And trying to commoditize a lot of the financial services ecosystem by getting more and more into the financial services value chain by owning the customer relationship and the brand.
Yep.
Now, the good news of financial institutions is pretty much in every part of the world, banks and the larger ones are incredibly trusted, not just by the consumers and enterprises, but frankly by the regulators and governments as well, right? And therefore, as they rethink their disruptive innovation and move into this beyond banking ecosystem model, you're going to see an amazing amount of similar examples, whether it be the agri ecosystem or whether it be how the mortgage ecosystem changes or the auto finance and the car ecosystem. You can go on and on and on. There's a lot of innovation that we're going to see over the coming years in that space, beyond, of course, managing risk and cost in the growth area. And we do think that the banking pyramid is going to get inverted. What do I mean by that? Because of all the complexity that we've talked about, today, about 2/3 of all the banking people process and technology and spend is in the middle and back office. Maybe about a third around customers and channels and ecosystems and partners. Tomorrow's model, that's going to get inverted, the inverted pyramid, where 2/3 of the focus is not going to be on run the bank, but change the bank and disruptive innovation and new ways of engaging with customers, new ecosystems, new value chains, new paradigm for value creation for their customers, with the middle and back office using exponential technology and extreme digitization and automation and things like large language models and such to empower their employees to really be doing things that are customer value adding, as opposed to processes that are required to be done, but are not necessarily customer value adding.
So finally, Shankar, when we look at everything you've just said, we look at the transformation of banking and banking services, and we're looking at the confluence of emerging business models, the proliferation of traditional, non-traditional competitors, the growth of technologies, the entrance of new tech companies doing a lot of the banking services. What does the future of banking look like from a perspective of competition and competitors? Who wins in this game? Who will come away with the lion's share of what we today view as banking, but are going to more and more likely to view in a much bigger sense? Is it going to be the tech companies? Is it going to be the very large banks? Do community banks even have a place in this environment? Or is it the fintech firms? Or do they each have a role that will play into a bigger pie?
Yeah, I mean, everyone has a role here, but from my vantage point, given the clients that I work with, my view is sharper when it comes to the financial institutions in terms of what they are doing and what they can do to win, right? Because financial institutions will be forced to rethink their business model and figure out how to add incremental value to their customers, taking advantage of exponential technology and new business capabilities around platforms and ecosystems that drive value for their customers. We're seeing that happen. There's going to be a lot more of that. The good news is that while regulations in financial services are onerous, because particularly when it comes to the larger financial institutions and even with the smaller ones in countries like the US, the regulators and the government tends to backstop the industry, and therefore they put a lot of regulations on the industry. Now that's both a friend and a foe.
Right.
Right? A foe in that it creates complexity and oversight. A friend in that it creates genuine barriers for non-traditional competitors to jump over the barrier, but it's not; those barriers are not insurmountable. They're getting breached. So the question for financial institutions is going to be, given all of this and given where the world is going, given that cost income ratios have been sticky and return on equity have in many instances not been achieving their cost of capital, given all the uncertainty in the global economy, it's both an opportunity and a threat. And the question I'd have, this is the way I would kind of respond to your question. So when I talk with senior executives of banks, I really ask them three questions, right? And get them thinking about and therefore what. The first question is, given all of this and everything we've talked about, is your strategy ambitious enough as you take a 3 to 5 year view? Do you believe you're executing fast enough? And do you have the people and capabilities to actually convert your vision into reality, right? And the answer to those three questions is going to determine whether a particular institution is going to win, or it's going to tread water, or whether it's going to fall behind, right? Is your strategy ambitious enough? Are you executing fast enough? Do you have the people and capabilities to execute and win? And those are the questions that ought to be top of mind, and they are for most of the clients we are working with.
Boy, that is an amazing set of questions, because when you get down to it, in the research we've done and the conversation we've had on the podcast, one thing becomes clear. There's no lack of understanding as to what's needed. There's no lack of understanding that payments modernization has to take place. There's no lack of understanding that technology has to be upgraded. There's no lack of understanding that people have to be taught and brought on quicker to be able to fill the needs that the technologies are providing. And there's no lack of understanding that competition's chomping at the heels of everybody in the industry. That said, to your questions, who's willing to do it? Who's willing to invest in it? Who's willing to push the needle and have a challenger mindset far enough in the future? And then who's going to actually do it? There's as you've, through your industry, I'm sure, through your industry knowledge and your tenure, I'm sure you've seen this in the past. You can bring a great solution to a financial institution, but if they don't implement it, you aren't going to see it happen. And again, we talk a good game sometimes. It's a matter of, to your point, who's willing to embrace change, take risks, and disrupt their organizations from what was the legacy format that they used before.
Yeah. Hey, I'll kind of wrap up our discussion with a vignette from a discussion that I had with a client many moons ago, which is still crystal clear in my mind. I was a young rookie partner when I was doing this piece of transformation work for this regional bank out in Australia, and I was telling this grizzled veteran CEO how he's got to change everything. And these are the days in which I'm helping them figure out how to move. Think about the days when you had to move transactions from branches into ATMs and call centers. I'm talking that era, right?
I know those years. Yep.
The CEO asked me to join him for dinner that evening, and he sits me down and he says, "Shanker, one thing you should not forget in your enthusiasm. In banking, you should never confuse a clear view for a short distance." But I tell you, in today's world, The
I love
distance is
it.
genuinely getting shorter. And I can say that
Oh, yeah.
over 2 decades after my dinner with the CEO over 20 years ago as a young rookie partner. There you go.
That is a great point to leave us on because that is very true. We've got to go beyond the talking to doing, and we also, I think, have to look around. We talk about the focus view, but what Money 2020 gives us is the opportunity to interact with banks from across the globe and to understand how others are viewing the exact same challenges and opportunities and what they're doing about it. You brought some great examples from India, from Singapore. I know some from China and from Egypt, and it's really interesting what's being done elsewhere. So while you have to narrow your view, you've got to keep your perspective broad as to what is possible in the industry. Shanker, I really appreciate the time with you. We are going to get together again, and I appreciate you sharing your insights.
Thank you very much, Jim. It was my pleasure.
Thanks for listening to Banking Transformed, the winner of 3 international awards for podcast excellence. If you enjoy what we're doing, please take 30 to 45 seconds to show some love in the form of a positive review. Finally, be sure to catch my recent articles on the financial brand and check out the research you're doing for the Digital Banking Report. This has been a production of Evergreen Podcasts. A special thank you to our senior producer, Leah Haslage, audio engineer, Sean Hoffman, and video producer, Will Pritz. I'm your host, Jim Marous. Until next time, remember, the banking battlefield is evolving daily. Every banker must be prepared for the unexpected.